Hello and welcome back to the channel. If you're thinking about buying a home, refinancing, or just keeping an eye on the housing market, today's update is actually pretty encouraging. Oil prices have continued to fall, with WTI crude now sitting under $70 a barrel. That's a big deal because energy costs drive a lot of inflation. Lower oil prices are helping push Treasury yields down too. The 10-year Treasury yield dropped another 4 basis points to 4.36%. When yields fall, mortgage rates usually follow, and that's exactly what we're seeing. Mortgage bonds had a strong day, moving higher and breaking above their key moving average. They're now testing some resistance, but the momentum is clearly shifting in a direction that supports lower borrowing costs. Now, the markets also saw the latest PCE inflation report, the Fed's preferred inflation gauge. Headline inflation rose to 4.1% year over year, and core inflation ticked up to 3.4%. At first glance, that sounds hot, but the bond market basically shrugged it off. Why? Because this data is from May, when oil was still around $100 a barrel. Markets are looking forward, and with oil now down over $30 since then, the inflation picture is improving. On the housing side, shelter costs are still overstating inflation in the official numbers, but real-time rent indicators are trending much lower, closer to 1% annualized. That's a positive long-term signal for future inflation readings. We also got the final Q1 GDP number, which was revised up slightly to 2.1%. Most of that strength came from less imports and AI-related investment, not from red-hot consumer spending. And durable goods orders showed solid core growth once you strip out aircraft. On the jobs front, initial unemployment claims fell nicely, which keeps the labor market stable without being too hot. Mortgage bonds look constructive after breaking key levels. The 10-year yield has broken below its 50-day moving average and is heading towards support. Overall, the technicals are leaning in favor of continued strength in bonds, which should support mortgage rates staying stable or trending lower in the near term. Bottom line for consumers, the combination of falling oil prices and a bond market that's looking past older inflation data is creating a more favorable environment for mortgage rates. While we're not expecting a massive crash in rates overnight, the pressure is easing in the right direction for anyone looking to buy or refinance. If you're in the market for a home, this is a good time to start talking to lenders and watching rate movements closely. Things can shift quickly. Let me know in the comments, are you planning to buy or refinance this year? Drop your thoughts below, and I'll see you in the next update. Thanks for watching. Hit like and subscribe if you found this helpful.